following content is an update and technical analysis on KB Home, a company of the consumer cyclical sector and residential construction here off the daily interval. It looked like we were going to have that breakdown sell signal, ended up gapping down, and it looks like we consolidated briefly and had a pretty massive looking short squeeze where you have definitely price action in the sense of a short covering panic there. What needs to be taken in context is these negative and bearish divergences have only grown larger. They've only constructed and established quite large here, where you have technical momentum indicators still waning, whereas you're having this huge market surge to the upside, where we've put in an even larger divergent high. Whereas what I see now is a little bit of a different picture, where we now have a nice, clean, hidden, concealed primary uptrend line here. Whereas you could tell here, we've had reactionary highs, reactionary lows. Again, nice, clean reactionary highs amongst it. Another one, back test. Had a nice breakdown right there. Looked like we were going to breach it for quite some time. Ended up back testing it once again. Came and got rejected. Bounced off that 382 Fibs retracement. Ended up getting rejected once again. And as I like to say, how powerful these concealed primary uptrend lines and or downtrend lines can present the next underlying trend within algos, machines, institutions. And we completely gapped up. Just insane, powerful moves by that concealed trend line. We ended up getting bid up right amongst it again, back tested it once again, and here we are. We ended up back testing it again, just pretty insane moves right off of it, and it's just a trend line that needs to be highly respected at all costs. And I believe we've come across an even stronger major support reactionary downtrend line that I'm about to zoom out on here off the monthly interval. And this is as good as it gets here for a full position short trade setup here, where we have reactionary downtrend line, price resistance right off the 2005 peak before the great financial collapse back in 2008. So KB Homes, the home builders, caught the memo before the peak of the housing market. They were the first ones to go here, and they never recovered right back above that key inflection point. It never came about. They never recovered back to still. A lot of investors are still underwater, 31% since the peak of the 2005 highs there. So it has been multi-decades since these investors have been underwater here. And now they have reached a pivotal inflection point, a much larger big wave here. Whereas you have the off the daily interval 100 Fibs retracement at that 50-25 price resistance coinciding with this uptrend line here. And we'll zoom right back in here. And we have that nice 50% Fibs retracement right at gap support there, which could have a backfill gap there at 40.76, which I would all traders, algos will have a pretty big attention amongst that key inflection point. That's a pretty big level to watch. But again, this offers an objective short trade entry now, whereas you set some stops potentially above that 50%, that 100% Fibs retracement there, down to the primary uptrend line, back to the concealed trend line for a 5.5% drop, down to 43.83 for an 8.1% crash on a backfill of the gap. And if we overshoot that, that is when the waterfall selling begins right there. That's where stops, margin calls, much larger wave of selling occurs, forced liquidations, whereas you have the 50 exponential moving average hovering up above, coinciding with the 43.83 price support and the hidden concealed trend line there. If that goes right there, that'll set up a daily candle close, sell signal breakdown, and I would expect a very strong wave of selling onto these next targets if and when we get it. But again, that would be a nice clean drop off that primary reactionary high downtrend line down to these targets. 40.76 for a 14.5% crash, 38.82 for an 18.7% crash on another gap support backfill, 36.87 for a 23% crash. And if we take that out, that's where things will really start to take its toll for a 27% crash down to 382 Fibs retracement. And then ultimately a big revisit of the 236 Fibs retracement we haven't seen since around that June, July region of 2022 for a 35% crash. So we'll see what happens. This risk reward ratio favors a move to the downside, whereas bull traders, long traders, they want to see a solid breakout above, burn off and eke out, churn to the upside, keep that bullish crossovers there on the MACD and oscillator continuously running to burn out those divergences, those negative and bearish divergences, burn out that divergent high, take out that 100% Fibs retracement, and have a complete multi-decade breakout amongst that monthly support there, which would be really bullish and a big move, which would be right back up there for 34% gains to the 65.78 price resistance. Call it the 161.8 Fibs retracement resistance there. But we'll see what happened. We are at a monumental multi-decade major resistance support, major resistance zone.